Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor. I got this first piece of information this morning from the 6MXRP Man. I used to watch that show when I was a kid, the $6 Million Man with Lee Majors. I remember the one episode where he fought against, I believe it was Bigfoot. And the Hulk also fought against Bigfoot. Bigfoot was a big deal back in the 80s, I guess. But anyway, this is at 6M_XRP_man. And he sent me this. So I wanted to go over this information that he had sent. So go follow him. He's in the XRP community. I see him a good bit and puts out information, so worthy of following. He sent me this article. This is from the Daily Hodl. Wall Street pours $24 billion into Bitcoin and crypto. A lot of times they add these onto the end of their articles, plus Ripple XRP. I think they're doing that for the search engines. But anyway, what this article is more or less about is the company Circle, okay? And the things they were covering in the article it was from a Circle tweet that they had put out about their 2018 year in review, which sent you to their I guess a write-up or their blog or something like that. But I took some of the more important points out of here. It says Goldman Sachs-backed Circle is reporting a whopping $24 billion in demand from institutional investors in 2018. And then it went on to mention, and I went over here and looked through here because there's even more information. It said Circle grew significantly, and we now serve over 8 million customers from over 195 countries. Across all products and services, we facilitated more than 200 million transactions that totaled roughly $75 billion in value. Then towards the end of this article, they went on to mention what they thought 2019 would look like. They said, we believe more traditional assets will be securitized through tokenization, and that includes shares in companies, debt, and other lending contracts and other forms of property and value. We talked about that a good bit yesterday. There was one other thing from this that caught my eye. They said that they started Circle Research. Now, one of the things that I have been saying a lot is that you're going to begin to see ratings agencies such as S&P 500, Fitch, and what's the other one? Moody's, and then Morningstar. You're going to begin to see all those ratings companies come into this business. And the reason you are is because that's how the money's made. The brokers and the investment banks come in, and then the research firms piggyback off of these guys. In fact, I've shown you before where the research firms back in the financial crisis, such as S&P, there are literally articles you can go and where they were asked, why did you rate all these mortgage-backed securities so well when they were all garbage? And S&P, the person from the S&P, I think this is in the movie Too Big to Fail, they're basically saying, well, we get paid from the investment banks that we're ranking these package deals for. And so there's an obvious conflict of interest there. But the point is that this is about money. And so now you're going to see this is how these people get people to buy things. That they have a research, and so now you've got Circle Research. This is just an example research report on Cardano. I've told you a million times, all of this is going to be packaged to sell to the public, and this is how they package it through research. And so get ready. And then I've been saying for the last month, a lot of people in crypto, they get all upset when they see people give price predictions. And I've been saying, you better go ahead and get used to the idea of price predictions, because price predictions is a part of the financial markets, and you will begin to see more and more price predictions. But what's important is, and the reason I think a lot of people don't like price predictions, and I understand what they're saying in crypto, and you see it on Twitter a lot. Everybody gets mad about price prediction. The reason they get upset is because the price predictions are coming from yahoos that don't know what they're talking about. So there's two caveats that I would give you when we talk about price predictions. The first is, don't assume that all of the people out there are just blithering morons that can't decide what price predictions they should take seriously versus the price predictions that they should not take seriously. The world of investing is not for little boys and girls. It's for big boys, big boy pants. I use that word all the time. The reason I talk about big boy pants is because investing is not for people that don't have the guts to do things that involve risk. That's what investing is all about, especially in an emerging asset class such as crypto. And so when I tell people they need to put their big boy pants on, what I'm saying is, I'm really saying you don't need to be in this if you don't have your big boy pants on. And that means if you're too young or too immature or not sophisticated enough to see the difference between someone who's educated, who knows what they're talking about when they start making price predictions, and something else completely different, then you don't need to be in this anyway. And so it's not the price prediction itself that's the problem. It's the assumption that people are not sophisticated enough to read between the lines. Now, if someone is taking stupid ideas for price predictions from people that don't know what they're talking about, well, they don't need to be investing in crypto at all. But a price prediction that's based on facts and based on evidence and based on something that has a solid foundation, well, you better go ahead and get used to that, because that's coming. You're looking at it right here. This is Circle Research. Now, they don't give a specific price prediction here, but that's coming. I mean, as they're working, Fidelity said they're working on the models to evaluate all these digital assets based on whether it's having utility or various different things. And so as those things get worked out and they come up with their models, then you'll begin to see the strong buys, the neutrals, the price projections. It will come, and it's coming. And so don't be upset about price predictions. That's just a part of these markets. That's what gives people, that's how it's sold to the public. And it will be here. It'll be here sooner rather than later. Moving along. BitTrue Official. These guys had announced a week or so ago that they were going to do a lot of XRP trading pairs, and they've done them. As promised, we are adding 5 new XRP-based pairs by the end of the week. They are TRX, XLM, NEO, GAS, and OMG. For other top-voted pairs like ADA and VET, we will list those tokens first and add them in the next round, which will be pretty soon. Now, Coinbase, if you're listening, you can take a page. This is actually a company who really does listen to their customers. And for that reason, this company will do well. Listening to your customers is not just a tagline. If you actually do it, good things will happen, and good things will happen for BitTrue. So I thought that it was worthy of giving them a shout out. And if you don't follow them, go to @BitTrueOfficial. And if I'm not sure where they are geographically, but if it's near you, go check them out. Next, JC Collins. Now, this guy is really smart. If you don't follow him, it's @PhilosophyOfMet on Twitter, and he has his own website where he covers economics, esoterics, geopolitics, and science of patterns. He has a subscription model, but then he also has some of these articles that are free. but this guy is really smart. This guy's kind of scary smart, that kind of smart. But he says, like I've been saying, the central bank model is no longer able to provide the liquidity the world needs. The collapse of world central bank money, we're on the cusp, everyone. Something new is coming. 2019 is the year of the digital asset. And remember, I've said this time and time again, digital assets did not come right out of the financial crisis for no reason. Bitcoin and then XRP and some of the others, they came right out of the financial crisis. And there's many people that believe that even the people in traditional finance, such as the Wall Street people, behind the scenes were a part of this. I mean, there are theories that Wall Street knows that this is the solution to the nightmare of debt that they have created over 50 plus years. But this is he's retweeting a Zero Hedge article. Why has global liquidity crashed again? The future looks especially bad for those economies, firms, and institutions that have spent the last decade kicking the proverbial debt can down the road. That pretty much sums it up, folks. And I've been watching CNBC over the last few days, and I've been watching these people who ought to be ashamed of themselves on CNBC for the last 10 years. They have sold all of this to the public. Oh, yes, we got this great stock market and everything's so great. And they all know that this has all been this is the bubble of all bubbles, and it's been inflated by central banks and the debt that they've created. Go take a look at the U.S. debt clock and the debts around the world. This has all been puffed up, and it's all fake, and it's been fake, and they know it's been fake. And for them to sit on these financial networks and act like they're just clueless, oh, I can't understand why the market's going down now, you know. And they talk. What's crazy is that the central banks, they've all kept interest rates at zero for 10 years, at zero. That's never been done in the history of the world. They've kept these interest rates down at zero, and now when the central bank, because they know they have to, is finally starting to raise interest rates because they know from history that if they don't, they're going to have an even bigger problem. Now they're backed into a corner, and now these supposed analysts on CNBC are talking bad towards the central bank, who's trying to do the responsible thing and raise interest rates now. And they're not going crazy or anything, but they're doing that way too fast. Well, they haven't raised interest rates hardly at all in 10 years, people. And those people are right there along with them, letting all of that happen and letting those stocks be falsely inflated over the last 10 years. And now they're mad that something responsible is being done. And it's causing that same stock market that was inflated to be deflated. I mean, these guys are just unbelievable, and the gall is unbelievable. So now, here we are. And here is where we are. Now we see analysts starting to say, crypto markets to surge while stock market sinks. Well, where have you heard this for the last 8 months? This is where I've been coming for. Now, this is Tom Lee. He says, Wall Street Bull. It says, Wall Street, this is a CNBC Fast Money tweet. Wall Street Bull. Tom Lee says sell-off is in as a midlife crisis for the markets. Expects earnings season to be ugly. And what they're talking about here, and they come down here and it says a brighter outlook for crypto markets in 2019. Now I've called this the perfect storm, folks. And I'm going to read to you what they say here. It's talking about the Bloomberg GTI Vera Convergence Divergence Indicator. According to this new technical, now this is Bloomberg, the same people who not more than a week ago are telling you that Wall Street is running, everybody's running from crypto. According to this new technical indicator, in addition to Bloomberg's own Galaxy crypto index, Bitcoin is currently in a buy streak, not seen for several months. It went on to state that if buying pressure continues, as it has done for the past 13 days, then further gains are expected. eToro's Matty Greenspan added, if we are going by technical analysis, we can very easily see on the chart that we're much closer to the bottom than we are to the top. A sentiment echoed by Ethereum co-founder Joseph Lubin, who called the bottom last month, tweeting, I'm calling the crypto bottom of 2018. This bottom is marked by an epic amount of fear, uncertainty, and doubt from our friends in the fourth and crypto fifth estates. If these sentiments are to be believed, crypto markets could have a much better year than the previous one, while stock markets appear to be heading in the opposite direction and may accelerate declines if a certain president has his way. Finally, now I want to tell you something that came out yesterday with Ripple. This is from @BondCrypt, who sends me good information every day, @BONCRYP, a definite follow on Twitter. Ripple partner, National Bank of Kuwait, ties up with Swift's global payments innovation. On January 3rd, NBK announced the launch of Swift's GPI using the integration capabilities of ACI Worldwide's payment engine. And he's retweeting this AMB crypto articles. Ripple partnered National Bank of Kuwait ties up with Swift's global GPI. And then he also adds this. The Universal Payments Up company, ACI Worldwide, they power electronic payments for more than 5,100 organizations around the world. More than 1,000 of the largest financial institutions and intermediaries, as well as thousands of leading merchants globally, rely on ACI to execute $14 trillion each day in payments and securities. Each day. And this is the article that he sent. This is from AMB Crypto. If I can get there we go. Ripple partner National Bank of Kuwait ties up with Swift. I just wanted to read you this first part here. On January 3rd, National Bank of Kuwait announced the launch of Swift's global payments GPI using the integration capabilities of ACI Worldwide's payment engine. And then down here it says, first it says NBK is the same bank that launched National Direct Transfer Service using RippleNet, wherein customers will have access to the payment feature offered by Ripple. NBK had tweeted, for the first time in Kuwait, send money instantly with NBK Direct Remit. Log into NBK Online Banking using RippleNet's blockchain technology. NBK Direct Remit is currently available for Jordan. Now, people, we are now at a place, just think about this. Crypto has gone through a terrible bear market in 2018. The stock market is on a 10-year false bull run based on an inflated stock market bubble that is created from central banks inflating all of this. We are now the U.S. is completely debt-ridden. The world is debt-ridden. And now the stock market is crumbling, okay? And we're coming out of a major bear market in crypto, probably the 7th or 8th bear market in crypto. And so now, and meanwhile, Ripple has got 12 live customers now that are using XRP and will probably add no telling how many in 2019, and we should begin to see XRP volume from use case. We are literally in the perfect storm of the perfect digital asset, the greatest digital asset ever created. And 2019 and beyond is going to be very interesting. And I think it's going to be very interesting for our wallets. And I don't mean our digital wallets. I just mean our wallets in general. Last thing I want to show you before I let you go, tweet from C3 Nick. As we know, yesterday, the day before yesterday, Apple had some issues where their sales, I think, are going down from China. And I think Apple might be a company whose product life cycle is at an end in terms of some of these Apple products. And so C3 Nick saw a good opportunity because a company like Apple, when they're seeing the end of a product life cycle for something as big as the iPhone was, might be looking for the next big thing. So he says, Dear Tim Cook, CEO of Apple, I've heard that Apple is struggling a bit and that you are looking for new sectors to get into. What about solving a problem for billions of underbanked people around the world by natively integrating RippleNet into your products? What a genius idea from C3 Nick. So we need to retweet this. I'm going to retweet it right now. This is the kind of thing that is big, people. Even if the CEO of Apple never gets that out, these are the kind of good tweets, these are the kind of good ideas that really strengthen the XRP community, because even if that tweet never makes it in front of Tim Cook, it will make it around the world, and more and more people will see XRP and see how powerful the XRP community is, and that is only going to help our cause. I wanted to mention one other thing. For those of you that don't know, Tim Cook went to Auburn University, where the digital asset went to school. That's just a point of interest that I thought you should know. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe and hit the like button, and tell your friends and family that Tim Cook, the CEO of Apple, went to Auburn University, who did not have a very good football season. They did have a good ball game, by the way. Thank you for listening.